That's my view, Sanjeev. We may agree to disagree, but that's my view that when a brand takes this kind of an hit, both from a governance standard, from an institutional standard, and from a talent standard, there are long-term challenges which come up.
I fully agree with you, Nikunj. Like I said, it is best to wait and watch as the drama unfolds, buy it higher, but let more clarity come. You've seen 3 episodes like that, and where the over ownership by FIs always drives like a herd mentality. You saw the first case is HDFC Bank. It's still not recovered, despite being the largest mortgage lender and real estate in the best place ever. All you're questioning is now HDFC Bank's efficacy to increase margins and credit deposit. For God's sake, when a bank is trading at 2 times price to book 1 year forward in once in 20 years, this is the time you can't get opportunity again. But like I said, the dumb money has been only chasing HDFC Bank as a prima donna for the last 3 years. And that is what has upset the apple cart, because suddenly Nalco, sale, REC, PFC are up 3 times. So allocation of funds, dependence on one stock can be someone's curse and someone's opportunity. We are thinking that 2 times price to book, HDFC is priced in all negatives. If the mortgage book is growing the way it is, then you should not look at any other mortgage lender rather than HDFC or the bank as a whole.
Again with HDFC, why is it suffering? Because they've changed the guidance. Secretly, 4-year doubling now suddenly becomes a 5 to 6-year doubling. And that means that instead of 17-18% growth, they will be growing at about 12 to 13%. Now that's a 5% change on that kind of a large base, which means the promise that after the merger they will double in 4 years could actually happen in 5 or 6 years now. And that's what markets are telling you. That why should we give you this kind of a premium and this kind of a comfort, where HDFC in a sense had a reputation of under committing and over delivering. That was Aditya Puri for you, but Shashi Jagdishan has not lived up to that. And that I think is the most puzzling point, that why did the management did not foresee that this kind of a growth is going to be slowing down. I mean, if the economy would have slowed down, I would have argued that okay, it is a macro problem, but there is no macro problem. I mean, it's your assumptions and it's your calculations about HDFC which you thought is likely to grow, and it is actually not growing. But I'm going to just move away from these two stocks which in a sense have been painful stocks to something where wealth has got created. And a lot of wealth, Bhasin Saab, has got created in railway stocks. All you had to do is like close your eyes and throw a dart and railways, and ticket nahi mili, waiting list mein train hai, does not matter, but as long as you put a railway stock, you've hit out of the park. Would you buy railway stocks in this decline?
Well, we've booked out of some of them, particularly IRFC, RVNL, but we will look at opportunities. However, like I said, if Nalco numbers are good, why should I keep chasing stocks or sectors just because they've corrected? I am very positive on Nalco, ONGC, and you can add an NTPC there. So I think we will build our book over there. We think that PSUs have just seen a glimpse of re-rating, and yet the real picture is, picture abhi baki hai. So do your homework, do your legwork, and get into the stocks which you like. some of the quasi plays like REC, PFC still give room of comfort because their earnings have been stupendous and growth patterns on power have been strong. So if you do your diligence, you will get real picks. But for us, Nalco, ONGC, and NTPC are our 3 top picks. We think Nalco can be a doubler from here, if not very, very fast.
Read into the outlook on Aisha Motors. It's been a record performance that they have delivered in the quarter gone by. The volume growth as well has been steady, Sanjeev.
Well, Avan, you can see Hero's touched 5,000. Bajaj is almost on the cusp of 8,000. And Aisha, which was touted at 4,000 to be come out with brilliant results, has suffered more to do with the launch of the Harley and the Triumph by both those competitors. That has hurt Aisha rather than the earnings. I think the earnings were in line or better. But like I said, these are the weightage of stocks which you will give. Rural income still continue to be very, very strong. And I think that Hero and Bajaj, which have been 2 of our picks, will continue to outperform. On Aisha, we have a neutral rating, given that we will see how the competition bites in and how they are able to respond. I think Siddharth Lal has been an exceptional leader, but right now he has competition up his sleeve. So we will give that a miss. We think Bajaj and Hero in our portfolio are the best. The NCLT and the quotes. So I'll keep my observations till there.
You nudged me on Paytm, and while they continue to face that serious risk of customer exodus after the RBI curbing on its payments bank, Sanjiv, yesterday you had Macquarie cutting the price target all the way to 275. Considering that you have a holding here, have you exited Paytm completely?
No, Aisha, we remain firm. We think that there will be more color. Obviously, Macquarie is giving a technical call, which is increase the fear, similar to what he had said 2200 on HDFC Bank. So either of them will come correct. And congratulations to him on the fear call and the greed call. But we continue to remain positive that there will be a resolution. Now we know the lacuna, but that is more to do with how RBI and the fintech in charge try and rectify that. Yesterday, if you heard Axis Bank, they said we will be very, very thankful to RBI if they allow us to align with Paytm. So let me tell you, there are a lot of people who are just waiting to grab the asset or get into a license, because this is the father of fintech has been Paytm, and I think there will be a resolution. We cannot comment more. It is painful, like I said, but we have to sit through. Good opportunities and bad times don't come together.